They use the candle data. They're all different arrangements, different calculations on them, but it all uses the same data. So most of these patterns, especially when it comes to like divergence, convergence, they really apply to anything. They apply, you can use whatever indicator, whatever oscillator you use, which is nice. It's nice that you can find what you kind of like and what jives with you and use the same patterns. So we're seeing higher high in price, lower high on our oscillator. And now it actually flipped to red. Flipped to red. So that would show some bearish movement, some bearish momentum. Try to zoom in. Ooh, didn't see that we have a double top as well on the 1 hour. Interesting. I'm not totally convinced that Dixie has fallen out of this channel and is going to stay out. Not totally convinced, but worth keeping an eye on for sure. 11.3, 11.3. The 11.328 still trucking. Wonder if this divergence is even more noticeable on the hourly. Yeah, it's still there. So we see 1, 2, 3, and these are very close. But each one of these is lower than the previous one, just like we saw in the 4 hour, with 1, 2, 3 lower price actions, lower price lows. That's that divergence. Wicking up, man, that descending trend and that support, perfect. Really playing. I'm bummed that that dragon pattern didn't work out. I was excited. So that's triple divergence, I don't know, something like that. Binance US announced today, says Jerry, they're expanding to Florida. That's a pretty big deal. Still blows my mind that in the US different states allow, like, you can't, that just sounds super confusing to me. If you live in New York, you can't use XYZ exchange, but if you live in California, that just seems odd to me. Not a tax expert. So what the little lesson, because today's a chart and chill day until proven otherwise. If we get some spice, we'll just ditch the chillin' and we'll get hyping. But for now, I think I'm just gonna go with like what I had planned to do. Talk about divergences. So we have 3 different types of divergence. Now 3 different categories. This is probably why it's confusing to people. So there's 3 basically different categories and they go by different names. There's multiple names for each of these. So in general though, there's bearish divergence and there's bullish divergence. When looking for bearish divergence, you want to be comparing the highs. When looking for bullish divergence, you want to be comparing the lows. Seems counterintuitive. So what we just saw on Bitcoin on the 4 hour and 1 hour was, so I probably should have put this up here. So this box is going to be price, and then this is going to be indicator. I probably just shouldn't have done it this way, but that's okay. We're just, we're winging it. That box looks terrible. Why is it? On the stream, it's like you can't see the lines on the box. What's up with that? Oh man. There we go, that's making it much better. Okay, I can deal with this. So each one of these boxes is going to include 2 things, and if you know about divergence, you probably know what that is already. Maybe you've picked it up just by listening. So there's 2 elements in a divergence. There is the price action and the oscillator action. So what we're just seeing on Bitcoin was a low. We actually saw triple, but in this like the typical example, they just show like you just really do one. So a low and then a lower low, and because this is bullish divergence, then you would expect price to move up. But for now, I'm just going to keep it like this, low and a lower low for regular divergence. And then on the oscillator, you want to see a low with a higher low. It's just regular bullish divergence. Let's make this a different color. There we go. For bearish divergence, it's basically the exact opposite. So we see a high and then a higher high, and then you would expect a reversal. You'd expect it to go back down. Let's keep it this way to keep it really simple. And on your indicator, no matter what it is, as I was saying earlier, you'd expect to see a high and then a lower high. They really are the same thing, just flipped upside down. That's the difference. Because when you're looking for bullish, like I said, you're comparing the lows, and when you're looking for bearish div, you're comparing the highs. Lots of people will do this in the examples as well, to let you know that you're comparing lows versus highs. Highs versus lows. Okay, so hidden divergence. Bearish. Let's start with bearish, mix it up. For bearish hidden divergence, you're looking for a high, and then a lower high to move down. And on your oscillator, you're looking for a low and then a higher low. For hidden bullish divergence, you're looking for a low, then a higher low. And on your oscillator, you'd want a low and then a lower low. Wish I could get these colors to stay. You know what, I probably can't. Nah, all right. And then there's one more called exaggerated divergence. And I think exaggerated divergence is the reason that this can get so confusing for new people just to digest the idea, is because a lot of these things are just flipped. You know, like you replace the word highs with lows and it's the opposite. And exaggerated, I find, is extra confusing because it's also called, you could call it class C, but then class C is depending on the oscillator. Really, it's just these patterns you're looking for. That's why a lot of the time I used to not say what type of convergence or it is, because it doesn't really matter, it's the pattern. So exaggerated has to do with double bottoms or double tops. So exaggerated bearish divergence would be a double top on price and your oscillator making a high and then a lower high. Bullish exaggerated divergence would be the same thing. You're looking for a low, the same low, and then a reversal. And your oscillator is making a low and a higher low. So whenever you hear exaggerated, you're looking for a double top or a double bottom. If you hear class C, so the difference is instead of price making a double top, your oscillator is making a double top. And that's where it gets confusing, is because it's really the same thing. You're just swapping the signal of the price and the oscillator. This makes it a little better. It's funny because these are it's really simple. There's not a lot to these. You're just looking for very basic patterns. But because of, I think it honestly has a lot to do with how they're named and titled. That makes it confusing for new people. They're really, really simple. So maybe today we can try to find examples of each of these. Exaggerated is a little harder to find typically because there's not a lot of double topping and double bottoming in crypto in general. Actually, I think that looks pretty good now. Excellent. Now that Bitcoin price is in the way the whole time. There we go. So there is our mini lesson today. This is very basic. We saw bullish regular divergence, you could call it, as well. Class A, right? Yeah. Now that once I get in one mindset of calling them like regular, hidden, exaggerated, and then I get in like the class mindset, then I get all confused again. I don't know. It's all good. Oh, those are all right. All right, yeah. I'll take it. Let's look at that Bitcoin example just to make it drill this idea home. So we saw price make a low, a lower low, and again an even lower low, so this is triple. And we see our oscillator do so we have the lows on the oscillator. No. Lows on the oscillator coming up. An oscillator is any indicator that waves, that moves up and down. We have the lows coming up so far, and this can change. Like I said, if we got a really hard sell-off here, we could see this move down, but so far, we have the lows coming up, and we have price coming down, making new lower lows. So that is a perfect example of bullish divergence. Bam. Ta-da. Learning a lesson. Man, learning is so exciting. So then there's also more to this. I'm not gonna do all of them today. I think it would be too confusing. But then divergence gets split up again into reversal divergence, which is this. This is technically like reversal divergence. And then there's another one called hidden divergence. And we'll get into that. We'll get into that another day. Maybe tomorrow. I don't know. Not today. If I could spell anything, that would be great. Whatever. So I'm gonna take a picture. Take a picture of it. Here you go, guys. There's your mini lesson for the day. Learning, charting, and farting. Charting and chilling. Learning and burning. I don't know, man. So, moving, that's kind of like the intro part. Got nice and thrown off in the beginning again. It would be nice to have just like one smooth start to these streams for a change. We have in the past, but something happened. Well, no, something changed with the streaming software, the way it connects to the platforms, and it's been giving me some problems. So, yeah, is what it is. ADA, man. I'm liking this. I'm definitely liking this. Looking for a bounce. Alright. Alright. Now we can... it's time for the chillin' part. Perhaps.